What's up, guys? Welcome back to the Passive Income Star channel. My name is Skig. If you're new to the channel, I make new videos every Friday. Now today we're going to take a look at 3 small cap stocks that you can own for under $20 that will give you great returns. So get ready for some free game. We're about to get it. Alright, so welcome back, guys. So before we get started on those 3 stocks, I just wanted to give you guys a quick update on my portfolio. So as you can see right now, I am right around $34,153.15. Since the last time I did a video, which was roughly about 2 days ago, I have not added any funds to the account, and at that point it was at $33,950. So it has since gained, I would say, roughly about $200 within those 2 days. Today has been a pretty good day. If you look here, you could see pretty much the line graph for the day. Started out roughly around here when the markets open. It was at 34,114. Then it spiked up at this point, and then it just kept going, went up a little higher, 158. I think at the highest point right here it was 34K160, and then it kind of dipped back down, went back up, and kind of tapered off to where it is now. For the week so far, I am up 428.38, and for the month I am up $722.94. So, or 2.16%. So that's pretty good. Also, you guys remember the last time I showed you this little bar here with all my ETFs? They were pretty much all in the red the last video. As you can see right now, everything is in the green. So I'm pretty happy with where the portfolio is right now. Like I said, I didn't add any new funds to the account. These are all just gains from just owning stocks. Also, guys, so if you don't follow me on Instagram, please do. I'll put the tag right here. But what I'll also do is just show you guys my Instagram page real quick. So this is the Instagram name. It's Passive Income _. So I'll highlight it right here so you guys can see. But that's pretty much my Instagram. And I post every day. Sometimes 3-4 times a day, and I think I provide decent content. This was my most recent post right here. I'll pull it up so you guys could see it. Alright, so this was a post about Universal Corporation. The ticker is UVV, and it says here one of the largest producers of tobacco leaves, and its biggest customer is Altria. So there's a lot of good content on my Instagram. You could go ahead and follow at Passive Income _. Alright, guys, so here are the 3 companies that we're going to go ahead and take a look at today. These are all small cap companies, so you should remember small cap companies carry a greater risk, meaning that you could lose your capital gains easier when you're dealing with a small cap company. Just bear that in mind. Alright, so the first company that we have on the list is American Software. The ticker is AMSWA. The current share price is $14.63. It is below the 52-week high, which is $17.11. It does pay a dividend per share of 11 cents, and it pays it out quarterly. The PE ratio is 65, which is high, but for a software company or a technology company, it's not really high. And the reason for that is customers are willing to pay a higher price for tech companies because they grow at a faster rate. So usually people will pay more for a tech stock because they know that tech stocks have a greater return in the future. So not in every instance, a high P ratio is a bad thing, just so you understand. The market cap here is 440 million. So this is definitely a small cap company. All right, so these are all small cap companies. So let's go ahead and jump right into Robinhood so we could take a look at this company right now. All right, so we have it pulled up here. American Software. The current price, as you can see, is $14.63. This company is owned by 171 persons in Robinhood, and over the 5-year period, it has returned 71.71%. So over 5 years, 71.71%. If we go back here, it shows in December 26th of 2014, the stock price was $9.34. Fast forward to where we are now, the price is $14.63. So pretty much 71% gain over a 5-year period. If we scroll down here, it gives us some basic information about the company. It says American Software Inc. engages in the development, marketing of supply chain and enterprise software solutions. It operates through the following segments: supply chain management, information technology, and consulting. The SCM segment offers supply chain optimization and retail planning solutions. The IT consulting segment provides software enhancements, documentation, updates, customer education, consulting, systems integration services, maintenance, and support services. The other segment involves purchasing and materials management, customer order processing, financial, e-commerce, and traditional manufacturing solutions. The company was founded by James C. Edenfield in 1970 and is headquartered in Atlanta, Georgia. This is a small company. It has 424 employees. The dividend yield is 2.93%, and we already discussed the PE and the market cap. So if we go down here and we look at earnings, we could see they have had a couple of misses on earnings, but they've also had a couple of beats as well. So I would say it's roughly about 50-50 going over the last 7 quarters. I have 2 shares queued up, which should go through tomorrow. All right, so let's go ahead and hop on over to the website for American Software. So if we scroll down here, we have the main menu, and it just gives you some basic information on the company as far as, what's going on, news. And then here you can see that the company also has subsidiaries. All right, so what I wanted to go ahead and just take a quick look at here, we're going to go to investor relations, and I wanted to click on the earnings for this company, and this is going to pretty much pull up this PDF here. So if we go ahead and just take a quick look at the last quarter, so it says here American Software reports preliminary second quarter of fiscal year 2020 results. So it says here subscription fees increased 64% for the quarter, and cloud services annual contract value increases 55%. If we scroll down some more, it shows here this was reported on November 21st in Atlanta, American Software Inc. It shows the ticker, and it shows that it reported the preliminary results for the second quarter fiscal of 2020. If we scroll down here, and it has a couple of key bulletins. I just want to go over the first couple here. So the first one says subscription fees were $5.5 million for the quarter ending October 31st, 2019, a 64% increase compared to $3.3 million for the same period last year. While software license revenues were $1 million, a 48% decrease compared to $2 million for the same period last year, reflecting our continued transition to the SaaS engagement model. So what this is pretty much saying is for software license, they had a decrease of 48%. And the reason for that is they're moving away from selling the software license to providing the software as a service, which is what SaaS means, software as a service. So they're pretty much charging, a monthly fee for the software, whereas before they would sell it. So just to give you an example, let's use Windows 10. When you create a new computer and you want to put Windows on it, you would purchase a license for that software. And once you purchase the license, you pretty much own the software on that computer indefinitely. An example of a system that's software of a service is Adobe or Photoshop. So Adobe created Photoshop, and initially they were selling software license of Photoshop. At one point, I think it was like anywhere from, I would say about between $600 to $800 to purchase the software, and you would own it, and you would have a license to own it on that particular computer. They have since switched over to the software as a service model. So right now, if you were to own Photoshop, you would pretty much pay an annual fee. Now you could pay an annual fee, which you would receive a discount, or you could pay a monthly fee. I own Photoshop and I chose to pay the annual fee because it was cheaper. So that's pretty much what's going on here, just so you guys can get an understanding. All right, the second bulletin here says cloud services annual contract value increased approximately 55% to $22.4 million as of the quarter ended October 31st, 2019, compared to $14.5 million as of the same period for the prior year. So this company is obviously growing, and that's one of the benefits of small cap companies. If you choose the right ones, they're gonna grow at a faster rate than say a large cap company, who for the most part will have gains, but the gains will be a lot smaller. So that's the benefit of a small cap company. I just wanted to show you guys that one, and that was American Software. All right, so the next company on the list is Arbor Reality. This is a real estate investment trust. The ticker is ABR. The current share price is $14.54. It is below the 52-week high, which is $15.77. It does pay a dividend per share of 30 cents, and it pays it out quarterly. The PE ratio is 10, which is good, and the market cap on this company is $1.5 billion. Let's go ahead and hop on over to Robinhood so we could get some basic information about this company. So Arbor Reality, like I said, it's a real estate investment trust. They specialize in providing mortgages for multifamily homes. The current price is $14.54. Over the past 5 years, the stock is up 117.96%. So that's some amazing growth right there. If you could see, we go back to the start of the line chart. On December 19th of 2014, the price for Arbor was $6.55. Fast forward to today, the current price is $14.54. So 117% gain over a 5-year period. That's pretty awesome. If we go up here to see how many persons own the stock on Robinhood, it says here 5,532 people own Arbor Reality Trust on Robinhood. If we scroll down here to take a look at my investment in this stock, my equity is $785.16. My cost is $772.75. So I'm up 1.61%, or total gains in cash $12.41. My average cost is $14.31. The total shares I have is 54, and it represents 2.24% of my portfolio. I'm trying to scale up on this stock so that I can get it to, I would say, roughly about 5% of my portfolio. If we scroll down here, it gives you a quick overview of what Arbor does. It says Arbor Realty Trust Inc. operates as a real estate investment trust, which engages in the provision of loan origination and servicing for multifamily, senior housing, healthcare, and diverse commercial real estate assets. It operates through structured business and agency business segments. All right, the dividend yield on this stock is 7.87%, which is pretty good. I recently got a dividend payment from these guys, and I want to show you that real quickly. That was on December 2nd. The total amount was $7.80 for owning 26 shares at 30 cents per share. If we go back up here and we look at the EPS, we could see that over the last 7 quarters, they've pretty much beat earnings every single time. So this company is performing pretty well, actually. If we take a look at dividend.com for Arbor Realty Trust, we can also see that they have a track record of growing the dividend over the last 7 years. So for 7 consecutive years, they've grown the dividend every year. So that's a good thing. The payout ratio is 92.84%, which for a normal stock, that would be high, but for a REIT, that's totally normal. If we hop on over to the Arbor Realty Trust website here, it just gives you some basic information on what they do. It says here, grow your single family rental portfolio. So basically the logic behind this is they specialize in providing loans for people looking to purchase multifamily homes. And if you think about it from a logical standpoint, anyone who is looking to buy a multifamily home is obviously not going to live in all the homes. Even if they live in one of the homes, they're going to be renting out the others. So they're going to have income coming in so that they can actually service the loan. So that's pretty much, that's pretty much a no-brainer situation. If we go ahead and hop on over to the investor relations section here, I want to go ahead and just pull up some basic information. It says every one of these companies have different earning reports. They'll put it out different ways. These guys are more visual. The other company just gave you basic numbers. But as you can see here, they have these charts, and it says here servicing revenue is up 6%. So in 2018, for the same quarter, it was 82 million. For the same quarter in 2019, it's at 87 million. Escrow revenue is up 29% from 15 million in 2018 to 19 million in 2019. And then it says net interest income is 92 million in 2018, and for 2019 it's 116 million. And I will go ahead and leave a link in the description so you guys can pretty much look over the earning reports for these companies, and then you could use that to make your decision as far as what you want to do, if this is something that you want to put your money in. One other thing I wanted to show you guys on Robinhood, like I said before, small cap companies carry a higher risk. So to protect yourself from risk, what you can do is you could do something which is called a stop loss, and I'll show you guys how you could do that real quickly in Robinhood. So if we go over here, we're going to use Arbor as an example. I own 54 shares of this stock. If I go ahead and I click on sell, and let's say I put in all 54 shares, right? Then I'm going to click on this little icon here, the 3 dots, and it's going to say what type of order I want to make. The order type I'm going to select is stop loss, right? And it's going to ask for the stop loss price. So let's say my average cost is $14, but I am willing to, have it dip all the way down to $12. So I'll go ahead and put in $12 here. And pretty much what this will do is if the stock ever tanks and goes down to $12, it will automatically sell the shares to stop my losses. So if I don't have a stop loss and something crazy happens with this, small cap stock, it goes all the way down to, $4 or $3, I would have lost all that money. Whereas if I set a stop loss here for $12, I would still lose money because obviously I showed you guys my average cost is roughly about $14 per share, but I wouldn't lose as much. So once it gets to $12, it will automatically sell. All right. All right. So the next and final stock is American Eagle. The ticker is AEO. The current share price is $14.80. It is below the 52-week high, which is $24.30. Pays a dividend of 14 cents per share. It pays it quarterly. The PE is 9, and the market cap on this one is $2.4 billion. So this one is just a little bit outside of the small cap window. Small cap stocks are typically between 300 million and 2 billion. So this one's a little bit over. But, it's, for me, it's still considered a small cap company. All right, so let's go ahead and hop on over to Robinhood and take a look at this stock. All right, so the current price is $14.80. Over the past 5 years, the stock is up 11.45%. So not as great a gains as the last two stocks that we looked at, but gains are still gains. All right, so 44% of analysts recommend that you buy. The stock is owned by 3,734 people own American Eagle on Robinhood. So there you go. If we scroll on down here to look at my investment, my equity is $29.60. My cost is $32.32. So I'm down 8.42% on this stock. I own 2 shares. My average cost is $16.16. If we scroll down here, it pretty much tells you what they do. American Eagle Outfitters, also called American Eagle, is a multi-brand specialty retailer. It offers an assortment of apparel and accessories for men and women under the American Eagle Outfitters brand, and intimates, apparel, and personal care products for women under the Aerie brand. The dividend yield is 3.72%. If we scroll down here, I can show you guys my most recent payment, which was on October 25th for 28 cents, and that was for owning 2 shares. So it's pretty much 14 cents per share. If we take a look at American Eagle on dividend.com, and we scroll down here, we can see that the dividend growth is 1 year. So for 1 year, they have increased the dividend. The payout ratio is 35. And remember, the last stock I showed you was a REIT, and the payout ratio was like 95%. And I said that's normal for REITs. This is also pretty normal for a regular company like American Eagle. With a payout ratio of 35%, it means that they have a lot more room to grow and a lot more room to continually increase the dividend. So that's a good thing. If we go ahead here and hop on over to the American Eagle website, to get to the investor relations, you have to go ahead and scroll down. Scroll down. And we get to bottom here, and it says about AEO investors. If we click on that, it takes us over here, and it gives us some basic information on the stock. It says New York Stock Exchange, gives the ticker and the price, the last time it was updated. And it says here for investor news, on December 17, 2019, AEO declares a regular quarterly dividend of $13.75 per share. So pretty much 14 cents per share. December 11, 2019, American Eagle Outfitters reports record third quarter revenue. And if we click on this, what it's going to do is go ahead and take us over to the earnings report for that third quarter. And if we scroll down here, I'll just go over some of the key points. It says here December 11, comparable sales rose 5%, marking 19 consecutive quarters of growth. So they've had 19 quarters where they have grown revenue. So that's a good thing. If we scroll down some more, it says here to the bulletin points, it says total net revenue increased 63 million or 6% to a record 1.07 billion compared to 1 billion last year. So they've grown it. You know, this is the most recent revenue, and this was last year's revenue, so it's growing. Consolidated comparison sales increased 5%, following an 8% comparable sales increase last year. So last year they had an 8% increase, and this year they increased again, but by 5%. And by brand, American Eagle comparable jeans increased by 2%, following a 5% increase last year. Aries, which is their women line, I think it's mostly like underwear and like intimate apparel, comparable sales increased 20%, building on a 32% increase last year. So, you know, you can go to the different websites, look at the investor relations, and take a look at the earnings report, and you could pretty much go through it and determine, you know, if this is something that you want to invest in. I can tell you this, American Eagle is, I would say, one of the number one makers right now of denim. They're in almost every major mall, and jeans have kind of a unique moat against, I would say, like online sales, for the fact that most people, they want to physically try their jeans on before they purchase them, you know. So I think that's a good thing for this brand. And I actually wear the jeans. I like it. It's actually one of the only jeans that I wear. They're very comfy, they stretch, they fit nice, you know. And I just like the company. I like the company, I like the product, and I think it's a decent company. But like I said, guys, go ahead and do your own due diligence so you can figure out if you want to go ahead and invest in this company. All right, so that's it, guys. That's it for the 3 great small cap stocks that you could purchase for under $20. So just to recap what we went over today, we discussed what a small cap stock is, which is a stock between 300 million and 2 billion. The thing with small cap stocks, there's a greater risk, but there's also a greater reward because there's more growth when you invest in a small cap stock. We looked at the different earning reports for the different stocks, and I showed you guys how you could go to the website, pull the earning reports, and you could just read it. It's in plain English. The third thing that we went over is I showed you guys how to protect your equity by making or creating stop losses. And the fourth thing I wanted to point out to you guys is portfolio diversity. You know, don't have all your portfolio in large or mid cap stocks. Sometimes the great growth, the great earnings will happen with these small cap stocks. And I personally have roughly about 10 to 12% of my portfolio in small cap stocks. I have some mid cap stocks. The majority of my portfolio is in large cap stocks, but I still have small cap stocks for diversity because, like I said, those companies will give you greater growth. The other thing I talked about was the PE ratio for tech stocks, and how sometimes the PE ratio on tech stocks will be a little bit higher because people are willing to pay a higher price because those stocks tend to have a greater return in the future, and people are willing to pay for that. All right. So that's it for the video today, guys. Thank you so much for watching. If you like the video, go ahead and drop a like. If you like videos about investing and stocks, you could go ahead and subscribe to the channel. I make new videos every week. I also created a Patreon account. I will leave a link in the description if you guys would like to support the channel. That would be greatly appreciated. All right. Thank you so much again for watching the video, guys, and you have a wonderful day.